Crypto products are unregulated and could be highly volatile. Please be aware of the risks before investing.
राज, बाबूजी के आशीर्वाद से हमने अपनी नई शुरुआत तो कर ली, पर अपना फ्यूचर प्लान कैसे करें?
बड़े बड़े शहरों में ऐसी छोटी छोटी बातें होती रहती हैं।
Looking for perfect start? Get a Bitcoin today. Download the Unocoin app.
जब मैं तेरी उम्र का था ना, तो एक सक्सेसफुल करियर, लॉन्ग टर्म प्लानिंग सब रेडी करके रख चुका था। और एक इन महाराज को देखो, पूरा दिन फोन में लगा रहेगा।
दैट प्लानिंग तो मैंने भी कर रखी है, Unocoin के साथ।
नए जमाने के साथ नई चीजें आजमाएं। Looking for Bitcoin? Download the Unocoin app.
Guys, we really need to work hard. This wasn't a good quarter. Tell me, are you happy with this?
Unocoin.
Want to earn Bitcoin? Just grab your phone and shake it. Download the Unocoin app.
Bitcoin, 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 Bitcoin.
Get a systematic buying plan from the Unocoin app to get your Bitcoin today. Download the Unocoin app.
Hi, and good evening, everyone. Welcome to yet another interesting AMA topic of today. So today we are going to discuss about CPI data and its effects on crypto holdings. And today we having your so I'm going to go with the expert and taking you through the complete session. About myself, I am Sathish. I am the vice president here working in Uno. I've been into the space for last 5 years, and I believe I have quite a good amount of experience observing the market with respect to the technical analysis as well as the macroeconomics, which has the intrinsic impact on crypto markets, right? So coming to today's topic, CPI data. The reason why we have this topic on today's AMA is primarily because just in few minutes, probably I think around 20 odd minutes, we are going to have a fresh CPI data that's going to be published. So this is primarily relevant to the US market, but the US markets data has a significant impact in crypto market. So there is a saying that with respect to the crypto, when US right? So just I will just quickly start with the high level overview. So just I will spend few minutes on that to give a high level understanding about what is CPI and why it is impacting the the crypto market. What are the levers that are there where the Federal Reserve is using to kind of manipulate, or I would say kind of control the market, right? So with that, meanwhile, what you guys can do is like if you have any questions, probably you can just drop it down, and after quite a brief that I've given with this topic, I will get back to the Q&A session, and will be highly happy to take questions on that and clarify all your doubts, right? So just to start with, in a very high level, right? So probably I will share my screen. Will be yeah, let's make screen visible. All right. When it's a consumer index, or in a very layman term, this is a representation of the inflation parameters that happens in a particular country. And in today's just primarily monitors, or kind of governs the monitor the economic growth or economic health, right? RBI, which is Reserve Bank of India in our country, right? And in the same parallel, similarly, we have Federal Reserve for US, also called as Fed, right? Fed, our topic today, over the the concepts or how the CPI data in Indian RBI system works as well. So they have, I would say, two major responsibilities. One is stability of the economy, growth, right? So by nature or by so stability is always so here. Whenever there is a spot that the central body or Fed has been put, whether they have to trade off between stability or growth, so the Fed will always prioritize over growth, hygiene factor, right? So they can, or they will be willing. So when I say stability or growth, or as I told, they have this parameters that they kind of have. One is inflation data. So inflation employment data, right? So I'm not saying that these are the only three factors, but these are the three very key factors that they will kind of try to emulate or try to monitor it, right? So in that, so whenever the inflation or employment data is out of balance, so it comes into the right. So they have deviates. So Fed or any central body will be under tremendous pressure to prime down or remove 2%. They have prime, right? Interest rate, right? The second one is balance sheet. Okay. So the whole point we are going to talk about is the inflation and the interest rate. So We'll talk about the interest rate just after a small break. All right, welcome back, guys. So, the different lever that often tries to control the inflation or primarily the core factor, right? So one of the things is interest rate, as I told. And another important factor is balance sheet. But for today's topic, probably we will confine to mostly interest rate because that's going to play a crucial role even for today's CPI data as well as tomorrow we have FOMC as well. So FOMC is where Fed is going to announce what is the interest rate they are going to determine for this particular month, going forward, right? All right. So as I told, whenever the inflation gets high or deviate above 2%, so they have interest rate to control, right? So how that affects, right? So typically, interest rate is nothing but the rate which Fed determines, for the economy, or for a simple terms, this is the rate where they determine for the all the local banks that are there in interest when they go from Fed. In a very very simple term, the interest rate increase, so that also reflects in all the products that the bank offers, be it loans or be it savings accounts or be it any investment accounts. So example, whenever the interest rate gets higher, so this borrowing rate or the interest to borrow also gets higher, which means that the cost of capital or the amount to borrow will become more expensive. On the other side, the saving schemes or the treasury, the risk-free schemes that offered by from the banks and governments, be it yield and bonds, all those also the interest also will become higher, which means the risk-free interest or risk-free investment vehicle will become slightly lucrative, right? So whenever the interest rate increases, so typically what happens is the cost of money becomes higher, becomes lucrative, right? In this case, what typically happens is since the cost of money is becoming expensive, so the borrowing gets reduced, spending also get reduced, right? So typically people, whenever the interest rate increases or the Fed increase the interest rate, so the whole spending of the economy gets reduced. The borrowing, all the economic activity, typically the economic activity means the spending, getting the capital from as a borrowing and all those stuff get reduced. And hence the overall economy also started shrinking down, right? So what happens, and as I told, another thing is because it is risk-free asset, like in a simple terms, in our let's say in our parlance, fixed deposit, right? So whenever the interest rate increases, the fixed deposit rate also increases. So let's say interest fixed deposit rate increased to 7%, 8%, which means that is pretty much lucrative because it is highly risk. So that is like into risk-free investment rather than taking high risk on stocks and cryptos, right? Risk off mode. Off mode, right? So typically, whenever the CPI inflation is high, the Fed will increase the inflation so that the risk-free will become the risk-free investment like bonds, treasuries, or fixed deposit. All this becomes lucrative, and people will be satisfied to just park the money in the risk-free environment rather than taking risk, right? So that's the major thing that happens whenever the inflation data or inflation is high, and the interest rate also gets high. Okay, so in the opposite way, whenever the inflation is trying getting under control, so inflation is now slowly getting into control. So the Fed will start thinking about it, because they are rate hike, the inflation is coming under control. Start that will be the next phase. So when this happens, typically, as I told, it will be complete opposite. So the interest rate, the borrowing rate will get reduced. The interest on yields and the fixed deposit or treasuries also will get reduced. So whenever that gets reduced, typically the market will slowly turn into risk on, right? So this is when they won't be the typical market will not be satisfied with the risk-free investment, and they wanted to have more returns. So they will start getting back into stocks and cryptos, right? So this is what's happening currently. So just to give a very very high level summary of that. So we have CPI or inflation, right? So when inflation is high, Fed will increase the interest rate to control, because which be happy with fixed up. They will be trying to avoid getting into risky assets like stocks and cryptos. But when CPI is kind of getting into control, interest rate, they will either pass it or they will start reducing it, and then it becomes risk on, right? So this is the case of the implications of CPI data that is coming in next 30 minutes, and based on which the interest rate will happen, whether the announcement of interest rate that will happen tomorrow, and because of which the market will turn into risk on or risk off mode, and that's what is affecting our crypto as well, right? So I think this is the high level summary. So typically I will see just if you have any questions before I proceed, or if not, I will just continue. All right. Yeah. Hey Sheikh, nice to connect with you guys. So, all right. So I think still we are yet to have some fruitful questions. So let me continue. Okay. So now this is the conceptual, conceptuality of the CPI and the inflation that you want to talk. So now let's get to the real data, right? So if you could see, this is the inflation data of US that's been published month on month, right? So this is from way dated back from 2021, right? So from 2021, if you see, that, or I can get even further. 2020 when the COVID came, right? So overview, we had COVID in 2020, and because of which US government has pumped in a lot of money into the market, right? Because of the stimulus package to maintain the economic healthiness and all those stuff. So because of which slowly, if you see month on month, the inflation is started increasing, right? The primary reason is because a lot of money pumped into the market, and because of which the spending capacity or spending behavior also increased, and so is the price. So if you see throughout 2021, from 2.62%, 4%, 5%, so every month it has been growing, right? 6%, 7, 8, and in 2022 June it has reached a peak of 9.1%, right? So typically one more thing which you have to understand or keep in mind is the market is forward looking. It's not, market will not price in just what is happening today, but the fact that happened today, and speculate what's going to happen 1 year, and that will be priced in. So that is called priced in. So typically what happens here is, so as and when the market, the inflation started increasing, they started pricing in that we are going to have rate hikes because government, as I told before, government wants to or Fed wants to control it. So there will be a rate hike that will come on, right? So as expected, from March onwards, 2021, government started or Fed started increasing the rate 0.25%, 0.5%. So every month they started increasing the rate. So before March 2021, the interest rate was zero, and from then on, every month on month they have started increasing the rate, right? And that also were some market. So after a few months, inflation of 2022 has 8, 5, 4. Now we had a impact 4.9. So if you see the overall one, so it and 4.9. Today the data forecast the of today's number that 4.1 is what forecast. So let's go by if at all if we just achieve the forecasted number, still it's a healthy control that is happening over CPA, right? So which means like few months before it was 9.1, way higher than the the accepted rate of 2%. So if we reach somewhere around 4%, I think it's a pretty good job done by the the agency Fed to curb inflation, right? So if that happens, typically tomorrow it pause. So all this month, as I told last 1 year or so, we have been every month we have had a rate hike, and which means again going back to the the summary which I've given. So whenever there is a rate hike happen, the risk off will be taken as a mode, which means that people will be happy to be out of the risky assets. Now that the market is showing signs of control, and also there is an expectation that if this is somewhere comes under this one, so typically we can expect tomorrow a rate pause could happen, and that will also reflect in the market. So probably we have another 5 more minutes. So just to give a high level understanding of what might happen here. So again going back to this one. So now if the forecasted number of 4.1 has been published, we're going to get if it is either meeting the forecast or if it is less than 0 or 3.9, 3.8, which means market has been made under control even better than the expectation. So it is like perform better than expected, right? If that happens, then the risk on mode will be even more greater, which means the stock market and crypto market can expect a good pump or become a bullish sentiment. And or if the CPI data is going to be higher or not expected, not met the expectation, probably let's say 4.5 or 4.8, or let's say even higher than last month. Let's say last month was 4.9. So if you are going to get a number which is like 5.3 or 5.4, then the question of rate pause that's going to happen will be a question, right? So probably they might also continue increasing. That might be the narrative that might happen, and in that case, the sentiment might again get into the risk off mode. And typically, we the right. So to say is we'll also get into the chart. So if you see here, this is like the 5 minute chart which is which is happening on Bitcoin market. So typically before some few minutes on before and after the data being published, there will be a high level of volatility being expected, primarily because people are placing their bets whether CPI data is going to be favorable or non-favorable, whether the market is going to be bullish or bearish. All those things, all those bets are happening currently, right? As a let's say as a if you're a trader, what I suggest, if you are very highly a pro trader, you can place your bet based on all the fundamentals, having a high understanding about the market and the implications of CPI. You can very well understand your risk management and you can place your bets. But if you're not this particular period when will be highly volatile, and without proper risk management and without proper experience, you will get busted most probably. And if you're a long-term investor, ideally this should not even impact you in your portfolio, because this is just this data comes month on month, right? This data will be very helpful, again, as I told, to foresee or forward look what might happen in next 3 months, 6 months. So that's where this data might help for a long-term investors. So being a long-term investor, you would see a pattern, like whether the market is the inflation is getting under control. And if that is the case, probably in coming months we can expect the market to gradually turn into risk on mode, because the rate pause can be expected in coming months if this trend continues. And when the rate pause comes, and after a point, well, there might also be a rate on mode will be these are the things that can happen. Long term investor, you it is primarily important for you to primarily understand the trends and foresee or forward look what might have an implication because of these past datas in next 6 months or 1 year for the long term investors. For short term investor, as I told, this definitely helps, right? To get a quick scalp. So now, as you see, we have another couple of minutes and market is high volatile. And once the data comes, again, the market will be highly volatile, and probably it will take another 10 to 15 minutes after the data comes to settle down. Once it settles down, then the market, the reason for 10-15 minutes is because all the positions are open, the short positions are long positions. So it will get, some position will get liquidated and will have a cascading effects and all those stuffs, right? So once that happens, probably after 10-15 minutes, the market changes the data and then the actual trend. So this is primarily what I wanted to give an understanding about CPI. And yeah, probably we'll wait for 1 more minute and we'll observe the charts. And then we'll discuss like what was the data and how the charts are performing or reacting, and then we'll have take any questions if there is anyone. So yep. All right. So as it's told, the volatility is kicking in. I think okay, the data came. Probably that's without seeing the data, just seeing the chart, we can say that whether the data is coming or not. There is a huge red and wick. I'll just see the data. All right. Okay, so the CPI data came as 4%. Okay. Yeah, if you could able to see here, I think this is quite a bullish news. Again, take it as a pinch of salt, because this is not the only factor that you should consider, but this is one of the important factor. So we had a forecast of 4%, 4.1%, and we had an actual number of 4%, which means from 9.1 few months back, it has been constantly decreasing and going inching towards the goal of 2%. And this is one major step from 4.9. Almost last month it was 5%, and it has gone to 4% this month, which is quite a significant improvement. Or I would say the number has performed way better than forecast or expected, and also compared to last month. So in that sense, theoretically it should be bullish. There you go, right? So the market is reacting very, very bullish now. And as I told, just it should give we should give some 5-10 minutes for the market to observe. So what would happen typically here is, as I told, previous few minutes or some uh, because before the actual data, a lot of people would have shorted it because they might think that data might not be good and market will crash, and a lot of people would have longed it because they might think that data will be better and market will go up. So people who are shorted, they would have been liquidated and they would have been forced to buy at higher price, and that is also having a cascading effect on going high. So all these are this volatility is because of lot of bets placed as a reaction to this news, and also a lot of liquidation that might getting happening now. So probably after another 10-15 minutes, the market will digest the news, and now again the market is trying to digest now what will the interest is going to be tomorrow. So there is a very very good chance, or probability is high, that the rate pause is gonna happen for the first time after many months, right? So that might also get priced in now. But again, you can always support tomorrow. There can be is the rate hike might get paused. So after after a long streak of rate hike happening for last one more than a year, the first time it might get passed. And if that's the case, probably as I told here, so the rate is paused, so the market will start turning into risk on, which means it's pretty good for crypto as well as stock markets, right? So I think that's it from my side. So just to give a high level understanding, conceptual understanding of what is CPI, what is interest rate, how it impacts, right? And also I thought I will spend that real moment with you guys when the data gets published and to see how the data, how the market reacts. So yep, with that I think I will conclude. And if you have any queries, so you can always reach out to support, and Unocoin team will be always happy and glad to help you guys out, not but about the space. So if you want, we have a lot of SMEs and experts who have very well experience in this space for quite a number of years, and you can always budge in if you're in Bangalore to our office and spend quality time understanding the market and the fundamentals, or you can always reach out to support to get any assistance, be it with respect to accounts, or you wanted to get some understanding, wanted to speak to some experts, whatever it is, right? All right, so I think with that we'll conclude today's session. So happy to spend time with you guys, and as I so told, hopefully from next GMA onwards, we'll have your favorite host Shambhavi to be here as well, and to make it more engaging, entertaining, and informative to you guys. So all right, so thank you very much, and have a great day. Keep monitoring the market, keep learn, and take some decision as detailed and much.